Welcome to Business Middle East. This week we focus on the reaction to the Federal Reserve's decision on interest rates, and in Business Snapshot, Iraq oil exports reach new highs. As was anticipated, the Fed left interest rates unchanged. However, Janet Yellen didn't mention a date for a possible rise, as she has done before, opening the door to speculation. The dollar fell sharply, giving gold a chance to achieve significant gains, taking advantage of the anxiety that swept through markets after the Fed's decision. What was the fallout in Middle East and North African markets? Here's the story.
After more than 8 months since ending QE, the Federal Reserve continued to postpone its decision to raise interest rates despite numerous promises in the past. In a non-committal statement, Janet Yellen urged markets not to fixate on when a rate rise would come.
I want to emphasize sometimes too much attention is placed on the timing of the first increase in the federal funds rate. And what should matter to market participants is the entire trajectory, the entire expected trajectory of policy.
Keeping the interest unchanged was good for US stocks and European markets. However, it was negative for the Middle East markets, who closed in the red after the Fed meeting, primarily Dubai and Saudi Arabia, despite the opening of its stock market to foreign investors. The US dollar index lost around 1% against the major currencies, and the euro remained strong at 1.14. Gold prices also took advantage of the dollar decline, rising by more than 1.5%.
For more analysis on the reaction in the financial markets and euro-dollar trading, joining us as usual is Nouradil Al-Hamari, Chief Market Strategist at ADS Securities in Abu Dhabi. Janet Yellen's tone during the meeting was rather vague. Do you consider this a deliberate strategy, or are decision-makers in the Fed uncertain about the US economy?
It may be a combination of the two. The Fed will continue in the language game and playing on words. This is what's happened in the past. At the same time, there is uncertainty among policymakers for the future outlook in light of floundering economic figures, including the negative and positive ones. As we noted in this term and the term before, the Fed disappointed the market and broke its promise on raising rates. Yellen's speech didn't surprise us, as we noted the economic conditions in the US remain weak. That's what the Fed has to look at finally, and it's why Yellen showed a sort of negative tone. The question remains whether the Fed is too late in raising rates. We'll wait for the economic releases to see about the Fed's next move.
How do you see the reaction of global markets and currencies after the meeting?
Of course, the US dollar declined against the major currencies following the decision. The market was pricing in a rate hike since October of last year. The new estimates now for the first rate hike by the Fed are in September or maybe December. The market has started to adjust the prices based on this. Even the euro is still very strong despite fears over a Greek default.
Why did the Middle East markets close in the red despite the Fed's decision not to increase interest rates?
The Middle East North Africa region markets usually get excited when the global central banks keep their current accommodative policies. However, this time it's different because of Ramadan, which includes many holidays throughout the month. Most of the investors liquidate their positions and leave the stock market for a while, and they are likely to come back after Ramadan. This leads to a lowering trade volume. Thus, the market may decline slightly and/or trade within a tight range. Moreover, Greek default fears are still weighing on global markets in general.
Thanks, Noor, for joining us. There are clear signs of recovery in the Iraqi oil market. Since last month, the second largest producer in OPEC has been heading towards high levels of exports, exceeding 3 million barrels a day. What are the factors? Let's take a look in Business Snapshot.
الأسباب نتابعها في Business Snapshot.
Iraqi oil exports increased to 3.2 million barrels per day since the beginning of June, according to oil sector sources. Analysts said the reason for the increase was the decision to divide crude into two different types, Basra light crude and Basra heavy crude. That helps to solve quality problems, which motivates some firms to up their production. Southern Iraqi fields, considered as some of the best in terms of production and quality, are located far away from the ISIL zone. Despite instability in the country, Iraq aims to continue with the same high level of production. This sheds light on OPEC's policy to prioritise members' market share rather than dealing with falling prices and oversupply.
That's all for now. Share your thoughts with us via Euronews' social network. Thanks for watching and see you next week.
ويتجدد الموعد الأسبوع المقبل. طابت أوقاتكم.